Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, we're just going to do a review of the stock market because it has been a couple days. Now, the last couple reviews that I did give for the Nasdaq and S&P 500 have held pretty solid, and we've basically been nailing the moves, Alpha fam, so kudos on that. But as you can see, it's just been a couple of mixed days on the charts. Let's go ahead and jump over to the S&P 500. You can see our macro structure here. And of course, if we do have some type of a great recession, if we do have some type of a global financial crisis, then I would probably expect our prices on the S&P 500 to come down into this blue zone. Either we're going to grab some type of a horizontal strength over here, or worst case, at the absolute bottom of this level. And of course, we could wick anywhere within that, depending on how scary the capitulation is. Should we be able to actually reach these levels? Of course, we do have a diagonal support that is to the upside. And stock evaluations are getting a little bit more reasonable than they were up here. Of course, all of this was still just a normal Fed injection of free money into the stock market, essentially by doing money printing and having very low interest rates. And so even this diagonal right here, which the market is hoping we can catch a bounce out off of, isn't necessarily our trajectory. And the reason why I say that is because the Fed is now tightening, right? The Fed is tightening, and this diagonal was created in an era of easing, in which free money or cheap money was very easy to come by. But as the Fed tightens, I suggest that we are going to probably violate this teal line that I have here, which is just my suggested support if we do find some type of temporary bounce. Perhaps even put in a double top before coming back down later, something like that. I mean, this could just spread the pain over multiple years as opposed to us just ripping the band-aid off and getting a V-shaped recovery or whatnot. But guys, that doesn't mean that this zone won't be valid, even if we do manage to escape this. Most likely, the market will want to come back here at some point to, just to capture some of this liquidity, because all of this was just free money. It was infinite money spending by the Trump administration and Jerome Powell. And then, of course, that last year of Jerome Powell's contract during the first year of Biden, after which his contract renewed, and it was contingent upon him, basically popping the bubble, the everything bubble, which would just crush our country, the United States, economically with inflation, had the Federal Reserve continued to do this up-only policy, which is absolutely just insane. This was a normal trajectory during, good times, during very good times, right? And then, of course, this was an awful time during COVID, and so there was absolutely no justification for stocks to go through the moon, to the moon, during such horrible times when, the global economy was essentially shutting down. This was all fake. This was all a bubble. This was fake news, fake economy, fake everything. And the American people are paying for it in the form of inflation. Also, countries across the world used American liquidity. They used that easing by the U.S. Federal Reserve because they all trade in dollars. And so, of course, now we're seeing countries also having their currencies hurt against the dollar as the dollar strengthens as interest rates go up, because, of course, that's just their own national policies and how they decide how to trade. But we can't control that in the United States. All we can do is try to get our inflation more in line. And so basically coming back onto this trajectory just to kind of normalize it, during healthy bullish times is, a no-brainer. And then, of course, if we have to make some correction because the economy, the real economy, not the fake kind of pump it to the moon Trump economy that's just was done through stimulus checks and, of course, through 0% interest rates and just money printing to the tune of $9 trillion. We have to pay for that somehow. The economy is probably going to have a recession, and then of course we can probably continue on our way sometime. Later on. This is just an average. Of course, the chart can go crazy right during that time. But guys, so that's your kind of a macro view, and you can see how far down we are. We've already come down a whopping 27%. I mean, it would be no problem whatsoever to come down a total of 40% or even 50% back to these COVID lows so that the economy can test what the real prices should be for things. And then we can continue on our merry way, right? As the Fed probably switches back to easing at some point, should there be some crisis. They will have reloaded the gunpowder in their, weapon inside of their tools for adjusting the economy, which is that capability to lower interest rates in case there's a national crisis. If we have 0% interest rates, then the Fed has no ammo to help the economy if we have a true crisis, right? And this was just a temporary thing, but we got out of it right here. So what was the point, right? What was the point of keeping 0% interest rates when we basically got out of the hole, right? This was the hole. We got out of the hole right here. Why did they keep 0% interest rates? It makes no sense. And also, you can probably understand this a little bit better as well, that all we had to do was basically get above this level, right? We just didn't want to die or whatever, right? All the Fed had to do was pump us above 50% of this drop, and then the market would have figured out some type of normalization. It may have been slower growth, but this type of exponential growth, that was just a fake economy by all these fake politicians and their stupid idiocy, right? As they kind of dickwag to the world. And, of course, the entire world did utilize that benefit, and now we're all paying the price, not the millionaires and the billionaires who got windfall profits, right, and dumped on your head, right? But of course, the little guy who's paying for it in the form of high food cost, high clothing cost, high rent cost, all of this stuff. And then, of course, the economy is collapsing with the everything bubble that's also collapsing. And so, guys, that's your 20,000 foot perspective on what's happening in the market and why I don't think that this is the correct bounce point. Yes, they could force it to bounce here, right? You can actually force, the stock market to bounce here, but that doesn't mean that it's actually going to be in line with the real economy. And so, as we enter a recession, no matter what type of brute force any of these politicians or the Fed or even overseas governments try to do to try to pump up the economic system, ultimately, the cycle, which is very healthy for the world, which is that businesses do well and then they get punished and only the best survive, and then those ones grow even more because they're the best. And so we have to have cycles. You can't just go up only. This was absolutely stupid, absurd. And again, guys, like I just people like worship some of these numbskulls in politics, and there's absolutely no reason to do so. So, guys, again, like that's the big view here. I do believe we're just on a wave cycle correction, probably coming back down here, and then we can go and do it again. But guys, again, like we could bounce off this area, we could bounce off this area, and yes, we could do something stupid like this and come back down later. So we'll have to find out later on. Jumping over to the 4-hour chart and just getting a little bit of a zoom in on what's going on here, we can just show you the little levels that we are kind of jumping off of. You do see us playing around on this level, on this level, on this level, and hey, that there's no, what's that about? Check it over here, guys, right? This level, this level, this level, right? And so this isn't a coincidence at all. Again, that's part of that normal, bullish times trajectory during just regular quantitative easing. But of course, I think that those days are behind us and that ultimately we will lose the support. Whether, we get like a little bounce the way that we have off of all of these levels, I don't know. I could see us doing that before ultimately coming to support this kind of like a horizontal or test this horizontal and then maybe doing the ultimate capitulation. Not sure, not sure. Obviously the politicians hope to get a little bounce before the elections. But guys, just for the day, let's zoom in a little bit more. Go ahead and take a look at my, just the local lines here. Just give a little bit of structure here. Of course, the Alpha Fam, we did project that we would bounce off of here. So boom, nailed it. We projected that we would have a rejection here. Boom, nailed it. We definitely projected that we would get a little bounce right here after being rejected up there. Boom, we got it. And then, of course, we are targeting this area for potential bullishness. And so far, it does look like we are on our way there. This obviously hasn't been confirmed yet, but would love to see us at least hit this target. And if we can surpass that, maybe even we test this macro line, although that might be asking for just a little bit much out of this, current economy. Let's go ahead and turn on the momentum pools so that we can see what we've been doing here. Of course, since it's been a couple days, I do have a couple stacked up here. Last time I was talking to you about the momentum pools. We were essentially looking at this price action over here, and then I suggested, if we bounced off this momentum pool, most likely we could stay bullish, and we have stayed bullish because we did actually hold on to this momentum pool quite well. We did swim to the bottom of it, got quite scary, but we didn't close under it or anything like that. We had the support of the 2 to 5 day at our back, right? When this white box is below us, that's actually extra strength that we have for our momentum. That did provide a deflection to the upside, and boom, yeah, we got that move that we were hoping for. Of course, that wasn't a call, but that was just something that I did suggest was likely because we had that 2 to 5 day at our back, and we definitely got that move. Of course, we did have a new day start, and then this would have been the projection there. Of course, for this one, we did have our 2 to 5 day projection over our head, and unfortunately, when your 2 to 5 day projection is overhead, that's a little bit bearish, and so we did lose the 2 to 5 day projection, and then we fell into the momentum pool, but we didn't even come close to losing the momentum pool. So effectively, this one, you can see we actually bounced off of our previous momentum pool, and that's why there was no real reason for an update. This pool was still holding us. Our momentum was still being driven forward, basically off of this movement, and so nothing really new happened there. Had we violated this this boundary here, probably I would have done an update as we approach the bottom of this pool. But other than that, we were just swimming around in this momentum area quite reasonably. And you can see this entire daily momentum pool covered both the daily and the 2 to 5 day projection of the previous one. So basically, no reason to update. The only thing is that we did have a shift on the 2 to 5 day, and we do have to get above that level. We did have to get above that level, close above that level, in order to have bullishness. Most likely to just keep going to the upside. But having just a bullish pullback, there's no problem with that. So just the market doing what it does. And so we can go ahead and delete this couple days old momentum pool. It's done its job. We can go ahead and delete, yesterday's momentum pool. It did its job. And so our current momentum pool basically is this one right here. And you can see it also goes to the previous momentum area. So really, there's no change. This thing is just behaving as expected, okay? So there's really nothing going on there. One thing that is interesting is that we are getting a nice push from the market above our new 2 to 5 day projection, which is what you want to see happen. You have to get above that 2 to 5 day projection. Again, having the 2 to 5 day projection on top of your price action and on top of your momentum box is not a good thing, guys, because it's like you're going into headwinds. Okay, it's just very difficult for you to get past that. And so if at the end of the day today, right, the end of the afternoon, we're able to close above the 2 to 5 day, that's going to be a fairly bullish sign, guys, for the S&P 500. And then of course, if we can just hang out in this area in general, that's still going to be fairly bullish. However, if we do take a dive back into this momentum pool, which, by the way, I think yellow is the wrong color for a liquid, analogy, because what's yellow that's a liquid anyway, guys? Let's go ahead and change that to a nice pardon me, a nice cool blue there, because that's our nice momentum pool, just a nice fresh water. And we went for a little dip, but we're on top of it. We're starting the day pretty strong. We are testing that 2 to 5 day projection. And look how price action is kind of struggling. You see how we just got above my momentum pool, and then we like popped up to that 2 to 5 day projection. So guys, like there really is something to the magic of these of these momentum pools that I'm developing for you as a strategy, because you can't see that we're getting a little bit of resistance there, but between these two, just pop like straight up, right? Just like how we like popped through the momentum zone, or we drowned, or whatever, like all of this stuff, there is some type of a magic that goes along with it. And so I will continue to develop that strategy. However, just to put a little bit more visual logic to it, I would suggest that this is effectively what we're seeing here. Not sure why. Not sure why that's hiding my arrow. What is that one? This one should be underneath it. Hmm. Okay, let's just turn off. Well, you know what? Let's just delete this box. It's being obtrusive. Guys, so basically, if we did have a bullish scenario, what I would like to see is, we could actually come all the way back down to the bottom of this momentum pool. I wouldn't want to see that happen, but we could come all the way back to the bottom of this momentum pool and still be okay, but better for us to be bouncing off of this diagonal here. You can see price action is bouncing off of that diagonal, so that's pretty good. Now, what people might not expect is that we could bounce our head into that 2 to 5 day projection. We could just kind of meander down a little bit, but as long as we get a nice hold there, maybe a little double bottom right there with this price action over here, then we do have the potential to go on a run. And of course, we'll want to surpass around this 3,800 level if we do want to get this higher target up here. Otherwise, we might put in a little bit of a double top, So the bullish signal is going to be at that 3,800, in which case, it's pretty much guaranteed that we're going to be popping up a little bit higher, because that will be a very bullish signal for the market. On the other hand, if we do chop our way down here, and we do kind of get stuck under this trend line right here, then there's a good chance that even if we wick outside it or whatever, that we are going to potentially go down lower and challenge our lows here. So getting above that 2 to 5 day projection is really essential. Getting above this green box at 3,800 is very essential for continuation. And so, guys, that's my kind of waves not analogy, but analysis for the S&P 500. If you want some signals using my kind of a proprietary, momentum analysis, then guys, here are your signals for you for the S&P 500, E-mini futures, obviously. Then what I'm looking for basically bullishness, right? You can say like 1 to 2 days. It's probably valid, and if we're above the 2 to 5 day zone, it's probably continuation for perhaps the week. But basically, as long as we're above 37.10, I'm bullish on this asset class right here, on this index, pardon me. And if we lose 36.30, then I'm going to be getting bearish. Okay. Now we do have a momentum zone that actually extends all the way down to 36. Let's just say. Well, let's just take a look at what I typed in from my calculation. 36.15. So 36.15 is really my ultimate low, but I'm going to get quite concerned under 36.30, guys. So, and then under 34.28, this is another calculated area. So under 34.28, I would just suggest that we're probably going to have some macro bearishness to the downside. And then if you want a chance for some macro bullishness, then getting above 38.45. So there you have it. There are your signals for the S&P 500, 38.45, 37.10 for bullish, 36.30 for bearish, 34.28 for ultra bearish. And guys, as long as we're in between the bullish and the bearish price levels, again, we're just in our momentum pool, just kind of swimming around. Totally chill. We haven't drowned yet, but we're also not sunbathing. Currently, right now, we're sunbathing at the side of the pool, above the water's edge, just getting some nice sunshine, refreshing ourselves. And so right now, the market is looking bullish, as you can tell by this beautiful candle here. Guys, let's go ahead and jump over to Nasdaq. Of course, if you look at Nasdaq, very similar setup, almost identical. In fact, I don't really need to review this for you. You can see, however, that from the other day, we did lose our momentum pool essentially. Well, let's go ahead and put this on the daily here. We did, let's see, this is not correct. This should be boop, 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 like that. This one is this one. And there we go. That makes more sense. That makes more sense. Okay, so we did have our momentum pool right here, and then for our daily candle, we did get on top of it. Of course, we did have the 2 to 5 day projection underneath the momentum pool. That's like wind at our back. It's just basically helping to push us upward. We did get a nice spike on this day on the Nasdaq, and so the momentum pool fulfilled its job. I can delete that one. It's a bullish projection, definitely hit. Then, of course, we had a little bit of a pullback, but we only pulled back to the top of this next day, projection, and then we kind of swam around in the momentum pool. The 2 to 5 day projection for the Nasdaq here was actually at the bottom of the pool, so that is supportive. And so you can see that we did hold at the top of the pool. We did eventually get back at the top of the pool. And so, of course, this one also did its job in terms of predictive ability, right? Now, of course, we do have a different setup here, which just like the S&P 500, now we have the 2 to 5 day projection on top of us, and that's not good because, of course, with the 2 to 5 day projection on top of us, that does suggest headwinds that we have coming our way. And so, if I go down to the 4 hour, you can see that it's very easy for us to just lose this area and get shoved back down into the pool. Now, right now, the price action is actually very bullish, but you can't see this naked candle. That might want to get filled. We also have a naked candle over here that's only partially filled. And so just watch out that we don't get rejected at this previous high, because we could find our way below this 2 to 5 day projection, which could just put that, again, those headwinds against us, push us back into the momentum pool towards the downside. But anyway, for the time being, as of this morning on October 20th, we are above, our momentum zones. And so the good old momentum pools there are doing their job to suggest, just what's bullish and what's bearish in general. If you do want to see some type of waves, then of course this is what I would be projecting on the Nasdaq there. See if I can turn on some local structure. And you can see a slightly different structure than the S&P 500. I think we can probably do something. Hmm, not not really. I mean, there's something here. I mean, there is something going on right there. So you can see this touch, this touch, this touch, and then we are facing a little bit of resistance at that point. So I'm just noticing, just from a price action point of view, there is something going on with this little trend right here. So we have to be careful that we don't get dumped right in this area. That could just be part of this healthy pullback. Of course, we have the full momentum zone to pull back to. So I have no problem if this thing pops up here, comes back down, and then pops back up, as long as it gets above my 2 to 5 day projection. Like, all of this is really cool right now. Again, like the closure at the end of the day is what matters, not what it's doing during the day. Okay, it could go for a swim, it could lay out in the sun, it could pretend to drown but then pop back up. Like, I don't care, as long as by the end of the day we can understand where it is in relation to this momentum pool, and then a little extra confluence with the 2 to 5 day projection there. However, of course, if we do get underneath this momentum pool, and we can't get more than 50% up above it, or we get some rejection off of this kind of a teal zone that I have here in the background, then we're most likely to find our way back to the previous lows there. And if you do want to just have extra bullishness, then of course you're going to want to get over this area here so you don't accidentally put in a double top. And so the goal really is to get above 11,448 if you want that continuation to the upside. But for today, we're doing just fine. Let's go ahead and put on. I have my signals on. Okay, I just can't see them. There we go. Let me turn off my blue momentum. And okay, here we go. So for our signals here, which I don't know why they're so far away, but let me just drag them over. Oh, that's not good. Just misaligned them. Okay. Just leave them alone. For our signals here, I would say that if you wanted to be ultra bullish, then you want to see us above 11,810-ish. If you want to just have a bullish bias in general, then we are going to want to be above that 11,151. I am going to have a bearish bias if we're under 10,900, and I'm going to have a very bearish perspective if we're under 10,423. And this is all, of course, depending on how we're just losing those three types of momentum. And then also I take into consideration EMAs as well. So really four types of momentum. But guys, that's the secret sauce that I have for you today. Don't want to make this episode too long, but I hope you can understand that additionally, in between this ultra bullish and this bullish level, which obviously we're bullish for the day, but what does that mean for continuation? Our continuation point additionally is up here around that 11,450-ish level, right? So there is some type of a intermediary level also there. Guys, that was your alpha for the day. Stay safe and happy trading.